summit. Dr. Saifedean Ammous. Saifedean is an independent economist, as well as a leading author, researcher, and educator. Saifedean holds a PhD from Columbia University, a master's from the London School of Economics, and a bachelor in mechanical engineering from the American University of Beirut. Saifedean teaches courses on economics of Bitcoin and on his learning platform, saifedean.com, and he hosts the Bitcoin Standard podcast. He's the author of 3 books, very well-known books. The first one is The Influential Bitcoin Standard, published in 2018. The second one is The Fiat Standard, and the third one is The Principles of Economics. Saifedean's opening and keynote address is titled The Evolution of Bitcoin. Saifedean, I'll pass over to you. Thank you very much for being part of the summit today.
Hello, thank you so much, Sonia, for hosting me. Thank you, everybody, for attending. It's a pleasure to be here. I'm going to be speaking about the evolution of Bitcoin. And let me just pull up my presentation here. It's loading. I think you guys can see it now, right? I'm just going to assume yes and go ahead. All right, so I'm going to be discussing the evolution of Bitcoin over time. And this is, I think, a very interesting way of thinking of Bitcoin, because Bitcoin has changed quite a bit over the past 15 years, but it's also not really changed much in many different ways. So let's dig in and try and think about how Bitcoin has evolved over those 15 years. The total value of the Bitcoin network was around $1,000 15 years ago. Today, it is a global reserve asset held by governments and corporations. The President of the United States is a Bitcoiner, and he talks about Bitcoin, and he talks about the importance of buying Bitcoin. And this is truly mind-blowing, because 15 years ago is not that long ago. And 15 years ago, the entire network was around $1,000 worth. So how did Bitcoin evolve during those 15 years? And what does this tell us about Bitcoin's evolution and how it's likely to evolve into the future? So first of all, let's begin with what Bitcoin is. Well, this is the definition that I used in my book, The Bitcoin Standard. And it's been out there for 8 years, and nobody's told me that it was terrible. And a lot of other people seem to like it. So I'm just going to go ahead and continue to stick with this definition, which I find to be quite useful for thinking about how Bitcoin works. What this is saying is effectively that Bitcoin is a peer-to-peer software that operates a payment network that has its own native currency that is protected from unexpected inflation. And it does that without having to rely on any trusted third parties. Now, that's interesting. Okay, cool. I'm sure there are some people who find those things cool, but really, let's face it, that sounds like a computer game for nerds. Who cares about making an online payment network with its own currency? People out there in the real world are using real currencies. So this seems like a role-playing game where people pretend to have money and then they send it to one another, which, I'm sure there are nerds out there who might like those things, but doesn't really sound like the sort of thing that the president of the United States or El Salvador or a billion-dollar company or a trillion-dollar company should be considering for their balance sheet, right? But indeed, this is what is happening. So why has this happened? Well, I think we can think about it in terms of the evolution of Bitcoin. We can think about the evolution of Bitcoin in 2 terms: in the economic way, in the economic evolution, and the technical evolution. Now, clearly, economically, Bitcoin has grown a lot, but technically, there have been a lot of improvements in the operation of Bitcoin. The software has improved the user experience enormously. The user interface has changed, and it's improved a lot. 15 years ago, you had to run command line interface to interact with Bitcoin. Now there are all kinds of other more friendly user interfaces for using it. Bitcoin has scaled, it's grown its capacity, introduction of things like SegWit and so on. The speed of downloading transactions has increased. The initial download of the blocks of the blockchain is faster, and the safety of the network is increased. A bunch of bugs have been removed. It's become more and more reliable. A lot more eyeballs have gone over the code. and taken out inefficiencies and added optimizations. So you could say that it has evolved technically quite a lot. And yet, really, technically, at its essence, Bitcoin has barely evolved at all in 16 years. Superficially, cosmetically, and in the way in which you interact with it, as we said, it's evolved, but at its essence, it's still doing the same basic, boring thing that it always does. It issues a new block of transactions every 10 minutes. And that's it. You could run the initial software release used by Satoshi today, and it would be able to sync to the current block height. It would take forever because it was a lot slower back then. And now we've got hundreds of gigabytes on the time chain, on the blockchain. And there was only one tiny little bug, which was in the software. I think it was called the value overflow bug. So if you remove that one tiny little bug, Satoshi's initial software, the original client that he used in order to run Bitcoin in January 2009, still works today. Nothing effectively, well, nothing essential to that software has changed. We haven't changed the supply, we haven't changed the way it works, we haven't changed the block time. It's still one block of transactions every 10 minutes, and it runs by the schedule of release of new coins that Satoshi had set back in 2008. And indeed, if you look at the technical parameters of Bitcoin, you see that they have not really gone up much. The maximum number of transactions has practically stayed at around 200 to 500,000 transactions per day. Goes up a little bit over that, goes down a little bit sometimes. But and you know, this graph doesn't look like it is so it's so stable, but really realistically it's between 200 and 800 for the vast majority of its life, which might seem a lot on this graph, but it's really not a lot, because during this time from 2014, 2015 until today, Bitcoin's grown enormously in terms of the number of users, but the number of transactions per day has not really grown much. And if we look at the size of the block size, the size of blocks in Bitcoin, that's also barely increased. It's still around 1 to 1.5 megabytes per block. Sometimes it goes up a little bit, it shoots up, as in over the last year or so. Usually it's been around 1 to 1.5. And again, considering the growth in the number of users and the growth in the economic value, the block size is remarkably stable. It's not gone up anywhere near enough to keep up with the increases in all of those other metrics, the economic metrics particularly. The transaction fees that are being paid in terms of uh, Bitcoin, they've also barely moved, somewhere between 10 and 100 Bitcoins per day, and that's basically it. And this is hasn't changed as time has gone by. So the technical parameters of the network have more or less stayed constant. And this is really remarkable, because how is it that governments and corporations are using as a reserve asset something so similar to the nerds' toy of 15 years? 15 years ago, nerds were playing with this system. And here we are 15 years later with governments and large corporations also playing around with the system in a very similar way. Still roughly the same block size, still roughly the same number of transactions, and still roughly the same even transaction fees when measured in terms of Bitcoin. So this is the technical side of it. But then, of course, there is the evolution on the economic side. Economically, Bitcoin has changed quite a lot. And this is what really matters. Why Bitcoin has grown, or how Bitcoin has grown, I should probably say, is because its value has gone up. So the market price of one Bitcoin has gone up from under 1 cent, or under a tenth of a cent, back in 2009 and 2010, all the way up to where it is right now, which is 85, last I checked, $85,000 per Bitcoin. So that's a fantastic growth in the price of one Bitcoin. But I think the more relevant metric is not just the price of one Bitcoin, I think it's the total market cap of the entire network, which means the total amount of cash balances that are stored in the network. And that's gone from something like $1,000 in 2010 to, or 2000, yeah, early 2010, it was around $1,000 or $2,000 or something like that. And now today it's close to $2 million. It's about 1.7 trillion. Sorry, not million, trillion. A trillion is a million millions. So it's about $1.7 trillion today. So we've gone from $1,000 to $1.7 trillion. And that's really the growth in Bitcoin. That's why Bitcoin has grown. And that explains the evolution of Bitcoin over time. I think this is really the key metric that people need to think about how Bitcoin has grown. And this is what trips up a lot of people because they continue to think of Bitcoin, particularly technical people. They continue to think of Bitcoin in terms of its technical parameters. And they continue to be frustrated by the fact that, well, the block size is not growing, the number of transactions is not growing, the network clearly can't scale, and therefore it's not going to grow. But a point that I make in the Bitcoin standard, which I believe is really significant, is that Bitcoin doesn't grow by growing the number of transactions. It doesn't grow by growing the block size. It doesn't grow by increasing its capacity of processing a higher number of transactions. It grows by growing its economic value. And so the transaction fees remain the same in Bitcoin terms, but they go up significantly in dollar terms. And the size of the market, the size of cash balances stored in Bitcoin grow enormously over time, whereas the technical parameters stay constant. So this is really what matters. And if you're able to get over the need to scale the technical parameters and understand that the scaling happens in the economical parameter, which is the size of the cash balances that are stored in Bitcoin, then you're going to be a lot happier with Bitcoin and you're going to make a lot more peace with it. Because word of advice, a lot of people lost their minds over the years trying to change Bitcoin, thinking that it needs to change its technical parameters and that if they can't get their favorite changes in, then the whole thing is going to fail. And these people, they've quit Bitcoin and they predicted that it would fail, and Bitcoin has just continued to go up and increase and value more and more and more. So we can think about Bitcoin's evolution as being a function of its market cap. The size of cash balances in Bitcoin determines how it is used. This is really the key thing to understand. Even though the technical parameters stay largely constant or they don't change much, the size of the cash balances in Bitcoin is what is the most important. At a market cap of around $100,000, Bitcoin is just a toy. Nobody can use it for anything important. At a market cap of around $100 trillion, Bitcoin is much larger than all of the world's monies. So at $100,000, imagine if all of the Bitcoin currently existed was worth $100,000 in total, you would not be able to use it for pretty much anything useful. It would be an online game where people move these little tokens between one another, but there would be no real liquidity for any kind of transactions. Yeah, maybe you can buy $5 of Bitcoin and then send them to somebody to give you access to some online game or something like that. But you can't buy $1,000. If you try to buy $1,000 when the entire market cap is $100,000, you're going to cause the price to rise significantly. You're going to increase the market cap, and then if you try and sell them, you're going to cause the price to crash. So there's not much liquidity. If the entire network is $100,000, most likely very few people would invest $1,000 in that network. But a market cap of $100 trillion, well, that's a lot bigger. And now, at the market cap of $100 trillion, it's possible for somebody to go in and out of Bitcoin with $1 billion without it even making a ripple. So somebody with a lot of money could go in and buy Bitcoin in that world. If it's $100 billion, if it's $100 trillion market cap, then his $1 billion purchase of Bitcoin, it might move the price a little bit, but it's still not going to be that consequential because at $100 trillion, a lot of people are holding Bitcoin, a lot of people are buying and selling. So this really is what matters, the size of the cash balances. That's the most important thing in this situation. And I think of the evolution of Bitcoin. I've always had these ideas, but I really only sat down and formulated them this time for this presentation, of trying to think about the different stages of Bitcoin. And so I quantify these in terms of the market capitalization. What is the total market capitalization of Bitcoin? From $0 to around $1 million, up until we had the time we had 1 million coins or so that were trading at around $1 each. Before it hit $1, and before we had around a million coins or so, Bitcoin is practically a toy. And in particular, it was a toy for cryptography nerds. You had to really be into cryptography. You had to understand how to deal with cryptographic functions on using your command line interface to be able to even use the network. So the number of people who could understand what was going on was very small. Cryptography is not football. It's not something that everybody knows. It's a very small group of people who understand it, and particularly back then. Now a lot more people understand um, cryptography, and a lot more people think about it and get the basics of it because it's been a pretty big thing because of Bitcoin's growth. But back then, very few people did. So it was a small little mailing list, and a bunch of people were using it and dealing with it. And so, up until $1 million per Bitcoin, it was largely just a toy for cryptography nerds. It was completely inconsequential to the real world. Outside of a small group of programmers, it didn't really matter. After it hit $1, that was really, I think, a point where it started attracting more attention. First of all, the capitalization grew. So now you have $1 million stored in this magic internet bean money. So now you started attracting a wider demographic of nerds. It wasn't just the cryptography nerds who were paying attention. Now, Wired magazine ran a feature on it, and more people started paying attention to it, and more people started using it for fun little things that you could do on the internet. At that point, there was some gambling, and that was, it's still a toy, but it was a larger toy, a little bit more serious of a toy than previously, than under $1 million. Now, after it hit $100 million or so, up until the point where it hit about a billion, that was, you could say that that was the period where it was big enough for dark markets and not too big to be in dark markets, because afterwards, as it started to grow more, it attracted more and more attention, and then it attracted the attention of governments, and then governments started to look under the hood and started to try and understand how things are working, and then they started clamping down on these dark markets. And over time, the use of Bitcoin in dark markets has declined, I would say, because Bitcoin privacy is not as reliable as a lot of people have wanted or thought they had. So at that stage, then, after we hit, I think, $1 billion, that's when it starts becoming a serious option for people who think about it from a political perspective. Libertarians would like to take money out of the hands of government. Now, obviously, these are broad outlines. So obviously, there were libertarians in Bitcoin before $1 billion. But I would say that was the point at which more libertarians started to pay attention, and then some investors started coming in with small sums, large investors with small sums, or small investors with small sums, and some really crazy, highly convicted fellows who started putting a lot of money into Bitcoin. And at that point, you started getting some kind of ideological affinity to Bitcoin. It's not just about buying drugs online. It's not just about pushing cryptography forward. It's not just about being able to gamble without the government finding out how you get your money in and out of the gambling website. After the 1 billion, it becomes a little bit more political and ideological. Yeah, this is a form of money that we're going to grow in order to replace government money. Now, after it hits $100 billion per coin, that's the point at which it starts, it starts to become really significant. They're thinking about, say, $5,000 per coin. At that point, it starts becoming more and more of a mainstream investor thing. Regular people who don't even think of themselves as libertarians, don't think of themselves as cryptographers, aren't interested in buying drugs. They just hear about this technology that has its price constantly go up, and they start buying. They set up an account on an exchange and they start buying a little bit. That's the period where you see these kind of small time investors. That's the period where you start seeing the idea of dollar cost averaging into Bitcoin, and people thinking about Bitcoin as a long-term asset to hold. Just keep buying every week or every month, send the money to your exchange and keep stacking Bitcoin. And that's obviously worked out very well for those people. But then at around $1 trillion, which was around the point of, say, $50,000 per Bitcoin, that's when it starts to really become, in my opinion, more of a serious uh, asset. And that's the point where large corporations and governments begin to use it as a treasury asset, because at these points it starts it starts to become large, large enough that these corporations and governments can go in and out in size and not worry about slippage. And I think this is really a key concept. Think about it like a fish in a pond. If it's a gigantic whale that you put into a small lake, you can't fit it into a lake. If you put it into the lake, it's going to move all the water out of the lake, and then the lake is going to basically be dry. But if it's a small fish, but if you put that same whale in an ocean, the ocean doesn't notice. So think about the size of the whale that can fit into the Bitcoin network as being a function of the price. The higher the price, the bigger the pool of liquidity, the bigger the body of water, the larger the fish that can fit in this. And so you could say that from 0 to 1, this was like a cup. And so you could put some very tiny little fish in it. And then from $1 million to $100 million, it's like a fish tank. And then $100 million to dark markets, it's like a small pond. $1 billion to $100 billion, it's like a lake. And then we see we can keep growing the amount of money that you could bring into this system as the size of the liquidity increases. And so we get to that point around $1 trillion. This is around when Michael Saylor became sort of the face of Bitcoin, because here's a large corporation that's being able to buy large quantities of Bitcoin, and it's seemingly working out well for them. So that starts attracting all kinds of attention. Then we get Bukele and El Salvador joining in and around. Again, these are really the pioneers. So they came in before $1 trillion, but after $1 trillion when this phenomenon really picks up. And I would expect that this is going to be the case up until we hit $10 trillion, where we're just getting more and more corporations and governments and large entities putting Bitcoin on their balance sheet. But then I think after $10 trillion, after that point, when Bitcoin is something like $500,000 or so, at that point, it can really be said to be a global reserve asset. And what I think is the distinction here is that it's not just something that companies would hold on their balance sheet because it's appreciating. At a certain point, maybe around $10 trillion, I could be off in the magnitude, but I would say, 5 times from here, then it becomes something that can be traded itself. Then you're going to start seeing opportunities for corporations to trade with one another using this asset, because now you have you'll probably be developing a critical mass of corporations that hold it on their asset. And if you're holding it on your asset, then you're willing to accept it for payment and you're willing to use it for payment. And so, as these sizes of cash balances increase, I think this is a very, very important point. Then you start seeing more and more transactions being carried out with this asset. Because when I guess a good way of thinking of it is that it's a function of the size of your portfolio. The larger the amount of money that you have stored in Bitcoin, the more you are able to use it, and the higher the chance that you're going to run into somebody else who also has a large cash balance in Bitcoin. And then if both of you have large cash balances in Bitcoin, then you can both trade with one another. And I think this phenomenon, or this stage, probably continues until around $100 trillion. We just keep witnessing more and more corporations stacking Bitcoin. But at around $100 trillion or so, I think Bitcoin transforms into becoming the world's money, because at that point, it's bigger than the dollar and it's bigger than all the other currencies. And once you're the biggest money in the world, or once you're the biggest cash balance in the world, once the size of cash balances in Bitcoin exceeds the size of cash balances in all other assets, then you become the world's money. So, what is the total demand for cash balances? And again, this is the framework that I like to use for thinking about Bitcoin. What do people use as cash today? Well, there's about $100 trillion of government money. There's about $100 trillion of government bonds. There's about $30 trillion of gold, and perhaps $100 trillion that is in real estate, equity, and art. But that's not really the total size of those markets. That's the size of the monetary premium that is added to these markets. So these are the competition. The competition is government money that's increasing at around 14% per year. Best national currencies are increasing at around 7% per year. The worst are at more than 20%. And so government money is not very formidable competition. So Bitcoin's total addressable market is around $300 trillion. That's the largest total addressable market ever. Nothing ever came close to this. Even the dollar cannot come close because it could never satisfy all the demand for money since it doesn't hold its value well. In a dollar world, people don't just hold dollar as cash, they hold government bonds, they hold gold, they hold all kinds of other things. So the dollar cannot eat all of this market because it loses value, and people don't want something that loses value, but Bitcoin can because Bitcoin increases in value. So I guess the way to think of it is that currently the majority of demand for Bitcoin right now is, or the majority of demand for investments today can be thought of as being investment, can be thought of as saving demand rather than investment demand. People are looking to preserve their wealth and not take risks in order to increase it. And that's not really possible under the fiat system because money on its own can't really go up. But over time, as as people start using Bitcoin, then that becomes a much better form of money. So this is the competition. Gold supply increases at 1.5%. Fiat money is at 14%, 8% in average. Worst case is much higher. But Bitcoin is only increasing at 0.8% per year. And so government money isn't that formidable of an opponent. I ran a little bit longer, so I'm going to have to skip this part. But it's really the difficulty adjustment that keeps Bitcoin supply fixed and prevents it from growing. And it's the fact that the supply doesn't grow is why it's going to continue to attract demand, more and more demand, in my opinion. So today, the investment case for Bitcoin is that it's a decentralized, politically neutral protocol that replaces fiat money and treasury bonds as a cash asset. But in the future, the investment case or the case for Bitcoin is just holding cash that appreciates with productivity. Now it's in the growth phase where it's going from 0% of cash balances to maybe 100% of cash balances. But once it gets to 100% of cash balances, well, at that point, it's going to only grow by this increase in productivity. In other words, its purchasing power is going to increase relatively very slowly. So now you can think about it as being like equity in or equity in a startup that is building up a monetary alternative to central banks. And rather than buy equity and get earnings in terms of yield, the way that Bitcoin sells its equity is through just holding the asset itself. And as the asset grows, as the network grows, then the size of the asset continues to grow. And so the case here is that instead of being a part-time hedge fund manager, having to balance all these other assets, you can just hold Bitcoin. And so over time, I think this becomes the world's money. Thank you very much.
Thank you so much, Saifedean. That was very, very interesting. I know it's short, there's so much more we could talk about. But we do have one question we're quickly going to ask you, and then we'll move on to the next session.
Mm-hmm.
We have a question coming out here asking whether you are writing a fourth book and whether that's going to be published soon.
Yes, I am. I'm running a little bit late. I was hoping to have it out by now, but it's running a little bit late, and it's something a little bit different. So I'm doing something very new for me, which is I'm writing a fiction book, and it's a new genre of books, perhaps because it's an economic fiction book. So it's like an economics textbook, but it's fictional, and it's called the Gold Standard. So completing the trilogy: the Bitcoin Standard, the Fiat Standard, and now the Gold Standard, and it discusses what the 20th century would have looked like if the 20th century was on a gold standard. So stay tuned.
Wow.
It'll be out this year.
Thank you so much, Saifedean. That was a really interesting talk. Hope to see you soon, perhaps at the next one that we host. But thank you for your session, and see you soon.
Thank you very much. Thanks for having me. Thank you, everybody, for attending.